Stocks see some follow-through buying from Thursday with a healthy advance decline ratio after India's Prime Minister Modi calls Donald Trump. Metals and industrials are the big gainers while FMCG and IT drag.
India's second largest asset management company and the most profitable at an operating level floats its 10,600 crore rupee IPO. That will see co-promoter Prudential pare part of its stake after 20 years. The fund house's CEO tells CNBC TV18 he sees a big opportunity in mobilizing bank savings and expects alternate investment funds to yield higher profits.
Silver prices hit a record high and gold climbs as US Treasury yields and the dollar soften. The copper also is at a new record high as several mines battle issues crimping supply.
Rupee hits a fresh low of 90.56 to the dollar and then recovers all losses. Dealers say oil companies bought dollars, but rupee recovery was due to exporters selling, not RBI support. Phone call between PM Modi and President Trump also not seen helping rupee since it didn't mention about the trade deal.
And Prime Minister Narendra Modi calls US President Donald Trump on Thursday to review the strategic partnership between the two nations. The two leaders agreed to work closely to address shared challenges and common interests. The call lifts the hopes on the tariff front. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormas Vatakia. With me as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Hormas. What a week it's been, right? We started in the red. We managed to then start gaining yesterday, snap that 3-day losing streak. And now Nifty firmly in the green.
Some follow-up buying coming in from yesterday. And the good part is that we're still managing to hold on to gains. It may not be a pure breakout as such because you're still oscillating in that range between that 50 DMA at around 25,700 to the 20 DMA, which we are at currently right now. So the higher end of the trading range is where we are at. 26,023 is the 20 DMA, is where the Nifty is. The intraday high somewhere close to 26,040. So we are nearing the highest point of the day, but sustaining above that 20-day moving average is going to be the key for the index. We have had 2 good days of follow-up buying now. We had a good recovery after the lows that we made yesterday, and we are continuing with that. So it's almost a 300-point recovery from the lows. L&T, the top contributor to the upside today after that upgrade that came in from Goldman Sachs. Reliance Industries has been the one that has ensured that the Nifty did not fall further or kept the losses in check and is now putting its hand up for the gains as well. ICICI Bank, Axis Bank, so the private banks, they led the recovery yesterday. They're doing so today as well. The only disappointing part though, Arundhati, is the FMCG index.
Absolutely. And I'm going to talk about that. But the mid-cap index also doing better than the blue chips today. But let's take a look at some of those indices that are doing well. The metal pack is leading from the front. Zinc, Hindalco and Nalco all in the green. All of them between 4 and 7% higher and all of them at 52-week highs. But as Hormas pointed out, most of the sectors are in the green except that FMCG pack, right? It's the top losing index, HUL, ITC, Varun Beverages, all of them in the red. The PSU banks also in the red today. But let's take a look at the rupee. The rupee touched a new all-time low of 90.56 in early trade on reports of some big defense and interest payment yesterday. The rupee, however, recovered most of its losses, mostly on dollar selling by traders and not just by the RBI. Lata Venkatesh is here with more on that. Lata?
Now, what we saw the early morning decline to 90.56, a bit of a shock because the market was expecting Reserve Bank to hold 90.50. What were the reasons? The reasons apparently are a spillover from yesterday and today. The fall we saw yesterday to 90.30 to even 90.40 was because of a large defense and interest rate payment going out. Today, that demand is apparently being replaced by oil companies' demand for dollars, making payments. Now, actually, in New York trading yesterday, that is after our markets closed in the offshore market, the rupee actually strengthened after this phone call between President Trump and Prime Minister Modi. The expectation was that there will be some strong announcements on the trade deal. But in early morning trades today, the same phone call became a reason to actually sell off the rupee or rather buy dollars, square off positions, because the phone call did not refer to the deal at all. It referred to several other things. So there was actually a bit of disappointment on that matter. Now, that said, there are 2 things that dealers are pointing to. The last 48 hours hectic move of the rupee or decline of the rupee. One is it is on very thin trades. As it is, as you come to the end of the year, the volume is low. Now people are not sure which way to trade. That also is reducing the liquidity. So it could be just, a 50 billion moving out, and the rupee could fall seminally because there is no support on either side. The second point dealers point out is, don't look at the recovery from the 90.56, the rupee recovering to 90, 30, 35 thereabouts, as RBI pushing up the currency. Actually, RBI is hardly there in the market. This is exporters themselves, exporters, traders, domestic bankers themselves pushing back the rupee because there is no support on either side. Everything is happening on thin trades. We just have to be prepared for all this volatility.
Lata, thank you for that update. The currency depreciation continuing to remain that big talking point, but so far has not had a bearing on our equity markets, at least. Shifting focus to the primary market action now, ICICI Prudential AMC's IPO has opened for subscription today. The company has a 10,600 crore rupee offer for sale. It is the second largest AMC by size and the largest by actively managed AUMs with a market size of close to 13.5%. Its higher equity skew makes it more profitable compared to peers, and that becomes the key risk which the SEBI consultation paper has capped on the expense ratio. We spoke to the management on the key risks and a lot more. Listen to what they had to say.
I think this industry has been regulated brilliantly by SEBI all these years, and the best thing part of this is that our expenses have always been controlled, right? So if my BIPs are going down, over the years my BIPs have gone down. If what I charge to the fund, but what is going down, what I am charging to the fund goes down. As I charge lesser and lesser, as my AUM grows, I charge lesser. That is anyway there. And as I charge lesser, my product becomes better and better for the final investor. Because SEBI has said it's a consultation, come and talk to us. As MFI, we are talking to SEBI. The idea is to rationalize some of the charges, right? I don't think, even if there is an impact, I don't think it is that major in my mind.
Time for a CNBC TV18 exclusive. Sources are telling CNBC TV18 that the life insurance industry is working on a way to cut distribution and commission costs. Yash Jain is here with all of those details. Yash, what are you picking up?
Well, the life insurance as well as the general insurance industry have moved in a big way when it comes to cutting down the distribution as well as the commission cost incurred on the sale of insurance policies. Very recently, the Insurance Regulatory Board, that is IRDAI chairman, had met the CEOs of the life insurance company. He had expressed concerns on higher distribution cost, higher commission cost, and asked for suggestions when it comes to ways in which the commission cost or the distribution cost can be lowered from the current point. What we've been given to understand from our sources is that life insurance industry coming together has formed a 9-member committee. The purpose of this committee or the responsibility of this committee is to bring down distribution or commission cost. The committee, as far as which is tasked with the responsibility of bringing down commission cost, had its first meeting just yesterday, and there were many suggestions, as we understand from our sources, which were discussed. But there is one very important suggestion where there is a unanimous agreement in terms of the way which the life insurance industry wants to take moving forward towards cutting down commissions or cutting down distribution costs. Now, that way essentially taken by the life insurance industry is to ask for the regulator's permission to adapt a deferred commission model and not the upfront front loading of commission model. What is a deferred commission model? I'll just explain that with one example. If it's a term life insurance policy, the period of the policy is 20 years. The first year commission right now is approximately 40%, and then every year there is a renewal commission of 5%. What a deferred commission model would be is that this 40% which is paid in the first year itself could be deferred across the first 5 years, and that too only if the policy comes up for renewal, which means the 40% which is paid in the first year itself could reduce to as low as 8%, and the next 8% for the next 5 years would only be paid if the policy comes up for renewal. This is a unanimous suggestion which the committee plans to put before the regulatory body on December 18th. The committee is scheduled to meet next week again, where they would be discussing the finer details and the framework as far as deferred commission model itself is concerned.
Very interesting. Yash, stay on, because you're also picking up something on a possible reduction in the expense of management for general insurers. Tell us more on that.
Well, I started by talking about how the life as well as general insurance industry have moved in a big way, towards taking that direction from IRDAI towards reducing distribution cost and commission cost. And just here, very recently, about 10 days ago, is when the IRDAI chairman met the CEOs of general insurance companies. What I've been given to understand from my sources is that the IRDAI chairman himself made a presentation talking about how the commission cost and the distribution cost, despite the GST cuts and their adjustments, still remains very high and needs to be brought down. In fact, what we've been given to understand from our sources is that IRDAI has asked for data for the last 5 years from every general and health insurance company when it comes to their cost of distribution as well as expenses of management for the previous 5 years. And in the same discussion, there were certain CEOs that we understand were of the view, and they suggested to IRDAI that the first step which the regulator should take is to penalize general and health insurance companies which are beyond the expenses of management limit, which currently stands at 30% for general insurance companies and 35% for health insurance companies. And the second suggestion, which also came from the CEOs to IRDAI chairman, was that the expenses of management limit itself should be reduced for vintage or old general insurance companies. The definition of vintage here, according to our sources, would be the companies which have been in operation for about 5 years. The expenses of management limit for these companies should be reduced from the current 30 and 35% by about 500 to 1,000 basis points, and should be brought down to about 20 and 25% for general and health insurance companies.
Yash, thank you for bringing us both of those exclusives. We'll get them up and running on our website very shortly as well, so you can read them in a lot of detail as Yash just explained. Take a short break. More news and updates follow on the other side. Stay tuned.
"26 years of
Welcome back. You're still with us on Business Lunch. Let's also get you some updates on the trade negotiations between India and the United States. Parikshit Luthra is here with all of those details. Parikshit, a call between Modi and Trump.
US Ambassador to India, Sergio Gore, has somehow put the context for the Modi-Trump phone call that happened last evening. He said it was a great call between two friends, and Prime Minister Modi reiterated India's support for Donald Trump's efforts to ensure peace between Russia and Ukraine. So clearly, there was a lot of discussion on the Russia-Ukraine war. When Prime Minister Modi and President Trump spoke yesterday, there was also reference to President Putin's visit to India for the 23rd annual India-Russia summit and what really was achieved there as well. Both leaders had a substantive and positive conversation. This is what our sources tell us. They discussed the entire comprehensive bilateral and strategic partnership. There was a discussion on trade, defense, security, critical minerals and energy ties as well. Both sides discussed ways to sustain the momentum on efforts to enhance bilateral trade between the two countries and take it to $500 billion as well. As far as the trade deal goes, we have seen how India has offered the best ever deal to Washington. This is something that Jamieson Greer has also said. In fact, according to certain media reports, the USTR has privately told certain senators that the 25% additional penalty on India for buying Russian oil could be dropped soon because India has stopped purchasing oil from Russian entities. And also, as we have seen, the imports from Russia of crude have also come down very significantly. We have been emphasizing to the US in every meeting that our energy imports from the United States have gone up almost 60 to 70% year on year. And going forward, US will be a major supplier of energy to India. So in this context, the talks have been progressing very well. We saw Rick Schweitzer, the Deputy USTR, also coming to India, meeting the Commerce Minister, meeting the Commerce Secretary. They held discussions on the legal contours of the bilateral agreement. But somewhere we are still waiting for Donald Trump to sign on the dotted line. Whether that can happen this month remains to be seen, but for the moment, there is no clarity on the timeline for the deal. According to industry bodies, the hope is that the average tariff rate would be 15%. This is something that Donald Trump and Prime Minister Modi have to agree on. And we will also have to see whether the recent measures and items raised by Donald Trump and the USTR regarding agriculture, whether those are included in the trade deal or not.
Parikshit, thank you for those updates. Just before we move on, you pull up Siemens. You can see the flashes on your screen. The company in its earnings call has mentioned that the digital industries business, the DI segment's margins will be sharply lower compared to what they had projected earlier. Now projecting 6 to 8% compared to 12 to 14% that they had earlier projected. They've also highlighted that the private capex that was seen during the months of November and December, it is difficult to say whether that will sustain going forward or not. And the concerns on the motion segment as the company is reevaluating its rail and motor capex as well. A sharp cut to the digital industry segment margins that now contributes to around 20 to 25% of Siemens' overall revenue. So the stock taking a bit of a knock now at the lowest point of the day, 3% lower, and get you more details on this as the day goes by. But for now, a sharp cut seen on Siemens. But speaking to CNBC TV18 Shireen Bhan on the 28th of November, Commerce Secretary and India's Chief Trade Negotiator Rajesh Agrawal had highlighted that two parallel negotiations were underway with the United States. Listen into what he had to say.
The assumption is that a trade deal will be beneficial for Indian exports only when there will be addressal of both 25% tariffs, not only the one which is a trade tariff which has been imposed on trade in lieu of the lack of trade deal, but also the other 25% tariff which have been imposed for some other geopolitical reasons. Until unless both are addressed together, it will not mean a meaningful deal for India. The stocks are still on, and it is because these are two negotiations also. There's a larger one also which is going on. So talks are on. Our teams are engaging virtually on a regular basis. There are virtual sessions every week on some issue or other. Let's wait for some time. You may see the visits can happen either way. Whether we visit them or they visit us. They were in pretty lockdown for some time, 45 days or so. Now they are out of lockdown.
On that note, it is time for us to head into a short break, but more news and updates coming up on the other side. Stay tuned.
"26 years of
Welcome back. Still at the 20 DMA is the Nifty. The Sensex also managing to hold on to gains, but the broader markets is where the action lies. A lot of stock-specific action taking place. But Arundhati and I take your leave on this edition of Business Lunch for the final time this week. That's the bigger takeaway. Midcap Radar takes the action forward on the other side. Stay tuned.
"26 years